Hello everybody and welcome to this video where we will today be running over the top 4 ETF, Clean Energy and Renewables ETF. These ETFs have been on fire for the most recent years and will most likely continue to do so in the future. Before jumping further into the video and to present the ETFs that we're going to have a look at, please have a look at one of our recent videos where we are comparing and benchmarking mutual funds versus index mutual funds versus ETFs versus stocks. There's a ton of valuable information for you to get a deeper understanding of the differences between the one, and also to get an understanding which one of these types that may suit you the best depending on which kind of investor profile you have. So again, check out the video. So today we have selected the following 4 ETFs. The first one, stock ticker Qcln, is iShares Global Clean Energy ETF. This one tracks the S&P Global Clean Energy Index and it invests at least 90% of its assets into this index. The remaining 10% can be invested in certain futures, options and swaps, cash and cash equivalent. And within the index, there are 28 clean energy related companies. Then we have TAN here, Invesco Solar Etf. So this one tracks the MAC Global Solar Energy Index. It invests at least 90% of its assets in securities in the underlying index, which has a primary focus on the solar industry. Then we have PBW, Invesco Wilder Hill Clean Energy ETF. This one tracks the Wilder Hill Clean Energy Index and the fund invests at least 90% of its assets in the securities of the index. The underlying index is composed of stocks publicly traded companies in the United States that are obviously engaged in the clean energy and conservation. The last one we have is Qcln, First Trust Nasdaq Clean Edge Green Energy IDX FD ETF. And this is an ETF that tracks the index called the Nasdaq Clean Edge Green Energy Index SM, and it invests at least 90% into the assets of the index. And the index purpose is to track the performance of small, mid and large capitalization clean energy companies that are publicly traded in the United States. So what is really interesting with these 4 ETFs is that although they all focus on clean energy and renewables, they actually focus on different sections within the sector or different areas. There are of course similarities, but there is also difference. So you're not getting the same portfolio and same type of portfolio depending on which of these ETFs that you do select. So before moving into more details on the holdings of these ETFs and the countries that it focuses on, we will just go through some of the general elements of the ETFs. So the first one is to look at the median bid-ask spread. It just shows the difference between the highest price buyer is willing to pay and the lowest price that a seller is willing to accept. And this illustrates a bit the liquidity of the ETF. So here we can see first that Qcln has around 5%, which is relatively low. The lower this number is, the higher the liquidity is, and the higher the number is, the lower is the liquidity. We can see for TAN it's around 9%, 10% for PBW and around 13% for Qcln. So again, they are not extremely liquid, but they are neither totally non-liquid. Next, we can also have a look at the beta ratio. It just shows the ETF's volatility in relation to the overall market. And if it's above 1, it means that they're more volatile than the general market. And as we can see across the board here, all of them are more volatile than the general market. The next part is the tracking error. It shows the divergence between the price behavior of the ETF and the price behavior of the underlying index that it's tracking. And we can see here there is quite a big tracking error of around 10 to 20% depending on which ETF you invest in. And again, this just means that if you look at the index that is mentioned up here, the ETF will not track it completely. It will have a divergence of around 20% for Qcln, TAN will have 17, 19% for PBW and 11% for Qcln. So two other main characteristics that is important to understand for ETFs is asset under management, also called AUM, and the average trading volume. So if we first take a look at the graph, we can see here in the blue bar that the asset under management for ICLN is $2 billion, 1.8 for TAN, almost 1 billion for PBW, and around 750 million for Qcln. We can also take a look at the average volume, which shows the number of shares that is traded on average per day, and we can see it's 3 million for ICLN, 1.3 for TAN, and around 280 for PBW and Qcln. So this again indicates some of the liquidity in these ETFs. And when I see these numbers, then for most investors, this means that the ETFs are relatively liquid, which is quite important. So as mentioned earlier in the video, there's definitely some differences what these ETFs focus on. So first of all, it is important to understand the risk profile from a country perspective and to understand how diversified is the ETF. So if we take a look at the ICLN here, we can see around 40% is in the United States, so the majority, but you have quite wide exposure with around 11% China, 9% in Canada, 6% in Spain, 6% in New Zealand, etc. So quite diversified from a country perspective, and that's in general really good. The same situation we have with TAN, slightly higher focus on United States and China, but it has diversification into other countries, especially in Europe. PBW, slightly more focused, especially on the United States here with 72%, and also China with 10%, and Canada and 8%, which is the majority countries in the ETF. And in the end, we have Qcln, which has the least diversification, and as you can see here, 83% is focused on the United States and 10% on China. So this ETF is very depending on how these countries and the companies within these countries are performing. So an even more interesting aspect of these ETF is to look at the top 10 company holdings. So if we first take a look at ICLN, we can see that the top 2 holdings is Sunrun and Solar Etf, which we covered in our separate solar video, so please check that one out. The next one is also a solar, so again relatively focused on the solar industry. However, the next one, Plug Power, which we also covered in our hydrogen stock video, is obviously focusing on hydrogen. You have Enphase Energy, another solar company. Then we go to Vestas and Siemens Gamesa, which is obviously manufacturing windmills in the wind industry, so you also get some exposure there. You have First Solar, that is also focused on the solar industry. Boralex, I do not know, and the same with Scatec. However, as I can see, it is solar. So I think this one is quite interesting and very diversified because you get some of the solar holdings, you get some hydrogen, and you get some of the wind companies. So TAN Holdings is, as explained initially in the video, solely focusing on the solar industry, and therefore all the holdings are related to solar, and this ETF is therefore the most specific focus on a single area within the renewables, so you don't get as much diversification as you would do on some of the others. So PBW is another very interesting ETF that is the most diversified, at least from a company holding perspective. So the top one is Lithium Americas Corporation, focusing on lithium, of course, for the manufacturing of batteries, but it's only 3.5%, where we can see that the other ETFs has around 9 to 10% of the top one holding. The next one is NIO, which is obviously a Tesla competitor and focusing on electrical vehicles. Then you have Sunrun again, you have Living Corporation that I do not know that well. You have Maxion Solar Technologies, which is a recent spin-off of SunPower, which we covered in a separate video. You have Blink Charging here that focus on charging of electric vehicles. You have Solar Edge, you have Workhorse, which is also focusing on electrical vehicles. You have SunPower, as just mentioned, and then down here in number 10 you have Bloom Energy Corporation, which we also covered in a separate video under hydrogen. So again, for this one you really get a lot of diversification into different industries, both related to manufacturing of batteries, to electrical vehicles, to solar, to hydrogen, etc. So really interesting ETF from this perspective. The last one is Qcln here, which has NIO and Tesla electrical vehicles in top 2, followed by 2 solar companies, Solar Etf and Enphase Energy. Then they have Albemarle Corporation, which is a specialty chemical company. They, among others, have lithium. You have Sunrun and Brookfield Renewable Partners. Brookfield Renewable Partners is present in a lot of different areas within renewables, both hydrogen, solar, wind power. They have power generating facilities across the world, and they are quite interesting. You have Universal Display Corporation, which focus on lighting, LED lighting, etc. You have a semiconductor company here, and you have Qcln, which, similar to Universal Display, focus on LED lighting. So again, all ETFs have a different focus and something different to offer. Qcln very much focus in renewable powers on solar, wind energy and hydrogen. TAN, it's only solar. PBW, a bit more into the electrical vehicle, but also solar, renewables and hydrogen. And then you have Qcln, which is focused even more on electrical vehicles, but also has some different elements as we just illustrated. So again, it's very important to understand the company holdings from the ETF, because they are different, they have some different to offer, and you as an investor may prefer one of these over the other. So we thought it would be good just to do a quick recap of what we have run over so far in the video. So first, the industry focus for Qcln: renewables, TAN, solar, PBW, solar plus EV plus some others, and Qcln, EV plus solar plus a little bit of other things as well. On the risk part, both the beta and track error, we think that Qcln is a medium from a risk perspective, while as TAN, PBW and Qcln is on the higher side. We also looked at the liquidity. For Qcln, it is high. It was the one that has the lowest bid-ask spread rate. The others are medium, but in general quite liquid, and they will be okay for most investors. The next was the country diversification. For Qcln, it was high, the same with TAN, while as PBW was medium. It was a bit more focused on the US and China, and the same thing with Qcln, which was the one that was the least country diversified. On the stock diversification, Qcln medium, TAN medium, PBW was the one with the highest. The top one holding only had 3.5%, and Qcln was also high, but again less high than PBW. Next, it's obviously important to have an understanding of how well these ETFs have been performed, and in general for all of them over the last 2 years they have been performing really well, as we can see here, between 17 to 37% 2 years ago, and this year it has gone completely bananas with between 107 to 165%. So these industry are massively on focus, obviously because there's a big focus on energy transition from fossil fuels to more renewable clean energies, and these ETFs, which are relatively new ETFs, only 6 years old, have taken advantage of, and I believe that they will continue to take advantage in the future. They will continue to grow, but again they also have had some years in the past where they have definitely underperformed and has given negative returns. What I think is going to be quite interesting with a lot of the companies within these ETFs is whether the growth can continue and whether some of them can really turn profitable, because that will determine the future development in the ETF share price. Currently, if we look how far they are from a 52-week high, we can see that Qcln 8%, TAN 9%, 8% for PBW, and Qcln is 4%. So again, a little bit room for the 52-week high, but not too much to give up. The next part is to look at the simple moving average, which just shows the benchmark of the current price versus the average of selected range of price. So we have here the 20 days, the 50 days and 200 days. Qcln, TAN and PBW are in a downtrend from the last 20 days, but they are an uptrend for 50 and 200 days. Qcln, as the only one of these ETFs, are still in an uptrend as of today. I think now we are in the time where the American election will come around, and this video is recorded before this. It's going to be very interesting to see, because this may reverse if Biden is elected, because he's very much focused on going into the energy transition, where Trump is very much more hesitant. So in the next days, depending on the presidential election, it could have a big impact on the share price of these ETFs. And unfortunately, this video will not be launched before the election is finished, so we cannot determine yet what will happen, but it's definitely going to be interesting. And I think if Biden wins again, they will go in uptrend again. If they lose, they may do a pullback, but that may also be an opportunity to get into these ETF at perhaps attractive prices. So one of the things that we think is very important is to illustrate in different ways how these ETFs has been performing. And first we want to take a look at, had you invested $10,000 1 year ago, how would that have developed? Who would have been the best investment? So we can see obviously that we just run over, all of them have been doing extremely well. Qcln here with 106%, a dividend yield of 2.16%, a total expense ratio, which is another important thing to understand before investing in ETFs. It is the annual cost that is taken from your account to pay the fund's total expense. So you want this to be as low as possible. And you can see Qcln 0.46%. So you had generated a return on 108%. Obviously, the return would have been around 21,000, not considering taxes, which is subject to which country you live in. TAN, on the other hand, would have given you 165%, so even better and the best among the four. PBW, 128%, really good as well. And Qcln on 130%. So overall, very good numbers across the board. Qcln is both paying the highest dividend and has the lowest expense ratio, but the return over the last year, it is the one that has performed the worst. So looking at an ETF for a 1 year perspective is obviously interesting, especially when they have grown so much. However, for most investors, they are investing in ETFs for the long term, and we therefore want to take a bit more long-term perspective when evaluating these ETFs. They are relatively new ETFs, have only existed for 6 years, so we cannot do a really long-term benchmark. We only have for the last 6 years. So in this graph, you will see the 4 ETFs that we have selected, benchmarked also against an S&P 500 ETF called VOO, the Vanguard. As we can see here, all the renewable and clean energy ETFs were struggling quite a bit for the first years, and it was actually only the Qcln that went above 100 index after 3 years. The rest stayed below, and it was only around 1 year ago that all of them surpassed the index 100 threshold from 6 years ago. The growth in the last year has obviously been massive, and they have all, based on a 6-year period, surpassed the S&P 500 ETF. But it is important to stress that for the first 5 years, the S&P 500 ETF was outperforming all these ETF. And it illustrates a bit that the S&P 500 is a bit more of a stable one, whereas the clean energy renewables are a bit more volatile, as we also talked a bit about earlier in the video. So the best one, if we look from a 6-year perspective, is the one that is called Qcln, the first trust, followed by PBW. The next one is the Qcln, and the last one is the TAN. So TAN, the solar one, was doing the best over the last year, but over 6 years have been doing the worst. And First Trust, which had a lot of focus on solar and electrical vehicles with Tesla and NIO, has been doing the best. This is again no indication of that the past will also be the same in the future, but it is interesting to see that it is a more diversified ETF within clean energy and renewables that has actually done the best. So again, just to go back to the overview, we looked at the total expense ratio. ICLN had the lowest, followed by Qcln, PBW and TAN. However, all of them were relatively okay priced. But again, the cost is much higher than investing in, for example, an ETF in the S&P 500 index, like the Vanguard we just ran over. The next one was the dividend yield, which is not too important in my opinion. ICLN was paying the best, followed by Qcln, and PBW and TAN was not paying anything. The performance for 1 year, TAN Energy was doing the best, followed by Qcln and PBW, which was very close, and ICLN was doing the worst. The performance for 6-year period, Qcln has been doing the best, followed by PBW, ICLN and TAN in the end. Next is the trend. Although the simple moving average for the last 20 days is in downtrend, we still feel that these ETFs are all in uptrend. However, it is important to stress that the election in US may either boost this uptrend or it may actually turn into a bit of a reverse downtrend. However, as the renewables and clean energy is the future, no matter what happens, we would not be too concerned to invest in any of these ETFs. Finally, which ETF among the 4 that we have run over do we like the best? We want to stress that there's a good outlook for all ETFs, so this is just a matter of our personal preference. So based on the ETF invest in various type of companies, it has a very high stock diversification, it has a very decent country diversification, and it has the second best return over the last 6 years. The one we select is PBW. The next one we will recommend, which is close to PBW, is the one that has high industry diversification. It has good prospects for its top 5 holdings in our opinion. It has the second lowest total expense ratio and it has the best return over the last 6 years. It is the First Trust Qcln. But again, we want to stress that all of these ETFs looks pretty interesting and promising. However, we prefer a little bit more diversification than, for example, focus solely on the solar stocks, because in the end of the day, they're going to compete with each other. But that's just a personal preference, and all of them will, in our opinion, be good choices for the future. This was all we had for today. Please keep in mind that we are not professional advisors and this is only done for entertainment purposes. We hope you enjoyed the video. Please hit the like button. Please subscribe for future content. Please provide a comment down below. And besides that, we all just want to wish you a very good day. Good luck. Stay safe. See you next time.